Hey, good morning, everybody. Welcome to Friday. What is that? Friday the 13th. Hey, it's a great day to be alive, and it's a great day here in Central Florida. I want to thank you for joining us today. I know yesterday didn't get a chance to really talk before we went on the air with Dave, but again, I wanted to kind of welcome you to the day and thank you for tuning in today also. Um, Remember that a couple things I want to talk about is the markets are getting close to highs again, all-time highs. So we'll talk about that today. We'll talk a little bit about interest rates again today. Some important things happening there. We're at the tail end of earnings season. Not much happening there. A few things reporting, but we've got a slew of economic reports. Hopefully, it'll be in about 8:30, and we'll talk about those with Dave today. You know, retirement is something that's important to each and every one of us. It is not something that needs to be taken lightly, and we need to make sure that we've got retirement strategies in place when we get ready to retire. You know, too many of us can remember what happened in '08, and so many people thought they were going to be able to retire the next year or two and couldn't. And I don't want that to happen to you. So we put together a free report on retirement strategies. All you need to do is text retirement to 863-285-3815. Do it right now before you forget. And let's get started this next quarter on the right foot. Hey, Dave will be with us in just a few moments.
105.7 Light FM. The Canadians would call him a hoser. It's Hosier there. We're at 841. Let's check in and find out how your money's doing on Wall Street. Your 401k, your IRA, all those things got socked away. You know, even money you stuff in an old mattress gets affected by the junk we talk about this time of the day. Downtown Sebring, we go to the offices of Statler Financial Services, where Phillip Statler is here online. Phillip, good morning. How are you?
Good morning, Dave. Hey, I'm doing well today. I hope you're doing well. Today is the last day of the week, and excited about that. Some people may be a little discouraged. It's Friday the 13th, but hey, it's a great start of a day, and I'm looking forward to the weekend.
I'm not going to walk under any ladders. I've always said I'm not superstitious, but I don't believe in taking chances, you know? That was just made sense to me. I mean, you know, why tempt fate even if I don't believe in it? Starting out our morning this morning, yesterday, another up day on Wall Street. We got good news overnight on the tariff front. China's decided they're not going to slap tariffs on our pork and soybeans, which are kind of integral foods to the Chinese diet. And you'd mentioned months and months and months ago they had some difficulties in their agriculture sector, so that's not necessarily an olive branch offering to us as much as it is enlightened self-interest on China's part, but our agricultural products are a big part of our exports to China, so that's good news, and we're looking at happy events over there, right?
Exactly. You know, so that's a good sign for us that's going to help the ag people in the Midwest. We also have Trump now talking about maybe a tentative, temporary agreement with China trade deal, not a permanent deal, but a temporary type of a trade deal. Obviously, he would like to have a final deal, but he's talking about now maybe doing a temporary deal with China in the meantime. So I found that kind of interesting, and that could be helping stock prices today too.
That's true. He may very well have, it finally may have occurred to him what the naysayers are saying, that yes, what you and I have been saying all along is true. We're big enough where we can wreck China's economy a lot worse than they can wreck ours, but at the same time, they got a big military they're not afraid to unleash on a restless citizenry as well, so they can endure the pain longer and just kind of force it on their population. So we can't lose a trade war per se, but it sure can be a long one because they got the staying power of guns to go along with their butter.
Well, that's right. I mean, it could get ugly on their end. So hopefully this is the start of maybe the end of the trade wars. But I wouldn't hold my breath.
No, but it has made this week a pretty nice one on the markets, hasn't it?
It really has. You know, we've seen some great increases. I know before I left for vacation, it was some pretty rough waters out there.
Absolutely. I went through a couple of weeks where I was really wishing to heck you were here because it was no fun whatsoever. But all of a sudden, things are coming up roses, and you've done some math as far as how close we are to record highs, and it's spitting distance, isn't it?
It really is. And I didn't do the math. I found an article that did the math for me. So, why reinvent the wheel? Hey, we got the Dow Jones Industrial Average is 177 points away from their July closing record high. And then we've got the S&P 500. They're about a half a point away. Now, the NASDAQ's the furthest away. It's 1.6% away from its July record close. But everybody had records in July, and everybody's getting close to that same record high again.
That's fascinating. The macro news that comes out this morning looks like it's going to help them. The thing that catches my eye, especially as relating to what you were just talking about, NASDAQ kind of lagging behind the other ones, import prices were listed this morning coming out of the government, and they're showing that import prices in this country have dropped 2% over the last year. And what did we lose, 0.5% or something like that last month in terms of import prices? Boy, those tariffs are really raising prices on us, aren't they?
And you're right. That caught you and I both a little off guard that import prices were actually down 0.5%, which was better than expected. They're expected to be down about 0.4%. So that's a good thing. And I guess it kind of goes along with maybe the retail sales number there, Dave.
Absolutely, because that was a pleasant surprise as well. 0.4% increase in retail sales last month, and the government backed up and said, oh, whoops, July wasn't bad, but it was even better than we expected. Both numbers, pleasant surprises.
It really was. They revised July up another 0.1%, which is a huge deal. And everybody was, a couple of articles I read expected it to be really a disappointment for August because of Amazon's Prime Days. In July, they felt like that really artificially inflated July's numbers and that August was going to be a big disappointment. But it really wasn't. The core number was in line with what was expected, which was 0.1%. But the total retail sales, they only expected it to go up about 0.2%, and it actually went up 0.4, double what was expected. So I got to think that's weighing in on the markets and giving them some momentum.
Yeah, I suspect. I put these two numbers together, and I keep seeing the picture of something that basically you and I have been saying. The economy is not dying, and we're not exactly crashing and burning. Maybe not going as fast as we'd love to in our dreams, but it looks okay. The import prices just I bounced that off of Apple's pricing decisions they were running the other day. First time they've ever introduced a new iPhone that's actually cheaper than the equivalent model from prior years. Kind of addresses something that you and I have been talking about. What are the companies going to be doing that import a lot of stuff? Well, some of them, at the very least, Apple being the poster child for it, they're just anticipating eating the tariff cost until things settle down.
Well, exactly. You mentioned Apple, and I find that interesting because Goldman Sachs actually just reduced their price target significantly on Apple by like $20-$25 a share. They think that the free trials, the TV is actually going to weigh on them and is going to reduce their profitability.
It's conceivable, but it's an interesting business strategy to be able to load up on subscribers for those two services quickly, isn't it?
It really is. I talked about that yesterday. So we'll see how that tumbles out, and hopefully they can keep the momentum they've got.
I got you. You got a couple of reports out this morning, too, kind of the stragglers from earnings season, right?
Hey, yeah, I do. But before I go there, I want to talk about interest rates again.
Yeah.
We yesterday, I threw out the balloon of Treasury talking about a 50-year Treasury bill.
Oh, yeah, that's right. We kind of made fun of that a little bit as being who's going to take yields like that for 50 long years, right?
Exactly. Now I read an article today on the Wall Street Journal about the century bonds, that there are municipal bonds being issued for 100 years. That just baffles me beyond belief that there are universities, Yale, Harvard, all those guys are issuing debt 100 years. So people are buying these 100-year bonds when we're at all-time lows when it comes to interest rates, I just can't see that being a really good investment right now.
You know, you mentioned that before we went on the air, and I was thinking, oh, it's got to be places like Stockton, California, that have interest rates somewhere up near a Visa or MasterCharge. But these are blue chippers that are doing 100-year bonds, even, huh?
Yeah, they are, and they even mentioned that there's some corporates that are thinking about going that direction, or that are going that direction, to really start to increase the length of their bonds, and for good reason, right? Because they feel like the economy is slowing down, so it's a great opportunity for them, for the institutions, the companies. I mean, it does make great sense for them. I wish I could go get 100-year bond and refinance all my stuff. I mean,
Oh, yeah.
that'd be great, right?
I'm going to go down to the boss's office and suggest we issue some of those.
Yeah, can I get a 100-year mortgage on my house, and how much better would that be? And so, yeah, it's the big guys can do that, as little guys can't.
Probably not. That's true. So tell me, which big guys might be capable of doing that off of their stock prices today?
Well, I only got a couple, but one of them I have is Broadcom, the chip maker.
Yeah.
They came in 3 cents ahead of estimates. Revenue was slightly below what Wall Street had forecasted. And they gave a kind of a cautious forecast for their market demand going forward. They're trading down about 1% today. So yesterday, remember we talked about an IPO coming out called Smile Direct Club.
Yeah.
And it was coming out at a higher price than expected. However, they had a pretty crappy day yesterday. Yeah, they ended up at $16.67, down 27.5% yesterday on their first day of trading.
Somebody knocked the teeth out of Smile Direct.
I guess they did. That's for sure. They're not smiling today.
Not very much. We could go on the puns, but let's set the table. Yesterday was a green day. Dow was up what would be a normal day, just a nice quiet day, up 45 points yesterday. NASDAQ up just under 25, and the Standard & Poor's was up about 8.5. That's a nice steady climb, the way you like to see it. And then we had some good news overnight, and things accelerated a little bit. 45 minutes before we opened, Phillip, what does the green ink look like so far?
Hey, we definitely still have green ink. It has backed off a little bit from the highs that were earlier this morning, but we still have the Dow up 1/3% at $86. The S&P 500 up 0.2% to 3,019, and then we've got the Nasdaq up right at 0.1%, $9.50. So we got gold and silver both trading down a little bit right now. And then we've got crude oil heading up. It's up about 1/3% to $55.28 a barrel.
All right. I noticed the 10-year Treasury bonds are up by about 10 basis points this morning. We're up to 1.83%. Maybe we ought to get some of that 100-year money in a hurry at these rates. Boy, they're big.
They are, and that's a big deal. I mean, think about it.
Really. Overseas markets are mixed this morning in Europe. Britain is off by just a little bit. Asia, for the most part, closed up early this morning. Phillip, somebody needs some advice to stabilize retirement and make it fruitful. How do I get a hold of you to make it happen?
And give us a call to schedule their financial x-ray report to make sure they don't have too much risk, especially since we're butting up against highs again. Call us at 382-0037. Also, I want to offer our free report again on retirement strategies. If you're close to 5 years out from retirement, this is vitally important to you. Text retirement to 863-285-3815, and then join us, Dave, every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on your sister station, News Talk, 7:30 a.m.
All righty, and us again here on Monday morning, same time on Light. Thank you very much, sir, and we'll see you then, all right?
All right, but you have a great weekend, and I'll talk to you on Monday.
Thank you, Phillip. You too. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I really appreciate it. I hope you enjoyed today. If you do, please like our page, Statler Financial Services, and share this video with your friends and family. don't forget that we do have our free report on retirement strategies, vitally important to you if you've already retired or if you're 5 years out from retirement. All you have to do is text the word retirement to 863-285-3815, or right in this post in Facebook, there's a click the link to retirement, and it'll take you right to the link where you can get that free report. Have a great day. Have a great weekend, and I look forward to speaking to you again on Monday.